You can do this. You can learn how to follow the markets with us every day. And what will be the benefits? We're going to help you figure out how to make your own printing press. And the printing press runs on the weekly crossovers, what we call vertical weekly crossovers. When they occur, the market moves down and we have inverse plays. Those are ETFs that move at the inverse of the market, such as with the S&P 500 is depicted by SPY, SH. It's the inverse of the S&P 500. So when the market rotates over going down, you can just get out, let everything go down and buy it back cheaply, or you can get into an inverse fund and ride it down and watch it go up. And of course, when the market's going up, then you jump into the ETF itself. You can also go short. You guys have been asking for a long time about some options training. We're going to put that out here in the next few weeks for you. Again, start off simple though. Learn how to follow the charts. Once you can turn this into a virtual printing press, then you can do anything you want. You can jump into options. You can keep it simple and simply buy ETFs. Whatever works for you. Now remember, we're not a stock calling service. We're an education firm. We want you to train with us. Once you learn how to do this, you can do whatever you want with your own money. Let's jump into the charts for the week. This is the comprehensive weekly review and forecast. And what do we see? Well, first, everything was up for the day on Friday. And as we look at our weekly charts, which are finally drawn, we see that the S&P 500 is a green spinning top, means indecision, tending up. We are below the weekly trend line. We had 8 weeks of nice, solid up movement. We had 5 weeks of solid up movement after the weekly vertical crossover. We see where things topped in the market back on the week ending the 1st of March, almost said April, 1st of March, and things have been going down since then for the last 2 weeks as far as the derivative oscillator goes. Price percent oscillator, however, which is our main indicator, spiking up again quite nicely. And again, some indecision when we look at price flow, but as we look at the price percent oscillator, it's looking quite nice. Now, we go from the weekly to the 2-day. What do we see going on there? Having a very hard time pulling away from the red signal line. Now, we don't have a complete 2-day candle on Friday. It's the first day of the latest 2-day candle. Derivative oscillator losing downward momentum. Maybe it'll switch over to green by the time this candle finishes drawing on Monday at the close of the market, and maybe the price percent oscillator is going to pull away quite nicely. If and when that happens, we'll be able to mark it. But right now, we're still in a confirmed down move. We don't have a trade. Remember, the weekly is up. The 2-day is down. The weekly and the 2-day have to be in confirmed, well, moving in the same direction, up or down, before we can look at any kind of trade. Now, let's zoom in to our smallest chart. We see the market down a little in the morning, up a little in the afternoon, pushing through the weekly trend line, however, as it got through the end of the day. But we do see the price percent oscillator flattening out. What the market's really doing has been sliding sideways since it topped out back in the afternoon on Wednesday earlier in the week. So the last 2 days, Thursday and Friday, really a sideways slide, derivative oscillator losing momentum, price percent oscillator about flat. That's the reason the 2 days not pulling away strongly from the red signal line. That's the reason the price percent oscillator on the 2 days not doing that. So that means it's not safe because we don't have a trend that we can follow. Now, the opposite is true when we leave the S&P 500, go to QQQ, the Qs. Some people call it the cubes. It is the NASDAQ 100. What do we see going on there? Well, we have a decent size green up candle. Does have a wick on the bottom, which means a little bit of quirkiness to it. However, price percent oscillator moving up nicely. The derivative oscillator losing a little momentum, but just barely on that weekly chart. Price pushing through at the end of the week, pushing through up. Oh, and by the way, S&P 500 up 0.05%, so barely up. The NASDAQ 100 up almost 1%, 0.93. So up substantially more and pushing through the weekly trend line, which is nice. Now we go from the weekly to the 2-day, what do we see there? Now, this is pulling away, unlike the S&P, which is almost laminated. We see on the Qs, the NASDAQ 100, a nice pulling away. Again, price movement is above that prior candle, just the first day of the latest, but nice pushing through the 2-day trend line as well above the weekly. So that's good to see. And then, of course, we go to the 4-hour. Now, remember, we had a jumping in point after the crossing over on Tuesday morning, had a jumping in point Tuesday afternoon. And again, it's Heikin Ashi candlesticks, so it's sort of hard for me to tell you the exact jumping in point without getting out of those candlesticks and looking at others. But somewhere around, we'll say the 174, 175 mark, high over the course of the day in the afternoon on Friday, 178.88. That's a lot higher than 175, isn't it, in just a couple of 3 days. So that's quite nice. And again, we see price movement had slid sideways on Thursday, but up in the morning and the afternoon. Again, people say, why do you do what you do? Why do you wait for a pullback on the 4-hour chart when you have the 2-day and the weekly moving in the same direction? Why do you wait for the 4-hour to pull back and move in the opposite direction, and then when it crosses over going up, jump in? Because it typically looks like it does right now. It works. That's why. That's why we do it. We've practiced over and over and over and over and over again, as those of you who've been with us a while, and you see it work over and over again. Now, this is our second way of jumping in. The best way of jumping into the market is, of course, our weekly vertical crossovers, and those happened quite a while back. The latest one did on the NASDAQ 100 back at the end of January. And, of course, it has been a nice run up since then, somewhere around the 160-something mark up to 178, so almost 179. So quite nice. Again, just the magic of the weekly vertical crossover. Going to leave stocks at this point, go to bonds. Bonds up for the day, 0.66%. Now we see that the price percent oscillator is moving up, not super strong, but moving up. Derivative oscillator still negative, but a nice green open box up candle. Price is still below that the last real trend line that we could draw on the weekly chart. We go from the weekly to the 2-day, and again, 2 days in a confirmed down move. Weekly's in an up move, 2 days in a down move. What does that tell you? You don't have a trading opportunity because of the schizophrenia between the two. They got to both be moving in the same direction. 2-day has not been able to cross over yet. Now, of course, we couldn't call a crossover even if it was looking that way right now because the candle has to finish drawing. But you can see the weakness there, just not even pushing as high on the latest candle as it did back on the 2-day candle ending on Tuesday the 12th. Still negative as far as the price percent oscillator goes and the derivative oscillator. Go to the 4-hour chart, and of course we do see things really having slid sideways, trying to pop back up in a positive, but again, got to have some strong movement to pull that 2-day that's still in a confirmed down move over. So don't have a trade in TLT. Remember, we don't need trades in lots of things. We find something like the Qs that's doing great. We ride that pony. That's all we need, one trade at a time. You try to keep up with more, and it's very, very hard to do good at anything. So lastly, we go to gold. What do we see gold doing? Well, I've been hoping that gold is going to cross over going down. You want to look at a magical chart, my friends, our weekly gold chart. If you know somebody who's a gold bug, they really like gold, they really want gold, ask them, do them a favor, send them a copy of our gold chart and say, hey, you might want to watch this as you watch gold and just sort of use it to help you figure out what gold's doing, because our chart is magnificent. And it looks like gold is trying to start moving down, but it hasn't happened yet. It hasn't crossed over. Derivative oscillator is negative, but that all-important price percent oscillator just won't go over. Looked like it was going to go over the week before last. But again, pulled back and just hasn't been enough. This latest week is a green spinning top, means indecision tending up. And again, just not enough to cross over going down. So the weekly is still in a confirmed up move. We can't call it down until it crosses 2-day is, of course, in a confirmed down move. Moved down strong for 6 days, and then for the last, that would be 7 days, it's been trying to move up, but again, not even enough power to get above the prior 2-day down candle ending Wednesday, the 6th of March. So again, not a lot of upward strength. Price percent oscillator, as shown by the price percent oscillator, still heading down quite strongly on the 2-day chart. And the derivative oscillator is still quite negative. We go to our last chart, which is the 4-hour chart for the week. And of course, we see it up in the morning and then losing a little bit in the afternoon. Gold was up for the day 0.46%, confirmed up move on the 4-hour, but that means nothing to us because the 2-day is still in a confirmed down move. So we'll see. Maybe gold will cross over going down, and we can look to either get out of gold in a practice trade if you, say, wanted to practice like you owned gold and you were getting rid of it to write it down, or you might get into something like DGZ, that's Delta Golf Zulu. Check that out. That's an inverse fund for gold. Well, hell, why don't I check it out for you? DGZ. That is the gold short ETF. If you look at that, of course, when gold, and let's go to the weekly chart so you can see what I'm talking about. See, once it crosses over, it will, of course, be tracking up as it did the last time gold moved down, tracked up quite considerably, somewhere around, oh gosh, the 113, we'll just say the opening, 113.44, all the way up to when gold peaked out at 115.62. And again, it is set up to track percentage-wise what gold does in the inverse. So if gold is going down, goes down 3% on gold itself, DGZ, since it's a just one-time inverse fund, would go up the opposite amount. So again, that's what an inverse fund is all about. Just a little bit of sophistication there. Hey, I'll put at the end of the training, I'll put a link to our inverse funds, how to make money when markets crash, because as I said yesterday, one thing I want to prepare you guys for, if you'll train with us every day, when a systemic market crash comes, and they're always on the way sometime in the future. I can't tell you when, but when it happens, I want you to be ready so that you're able to see it coming and not get hammered. How many of you got hammered back when it happened back in 2008? You know, how many of you just lost? Or, you know, you can look at when the market rolled over back in October and hammered down. We had a weekly vertical crossover, would have gotten you out of it if you would have seen it. So again, follow the market with us. We'll do everything we can to help you get trained, educated, and ready. That's what we're all about. If you appreciate what we do here for you for free every day, buy our book. You'll see a link to purchase it in the show notes. We're in our 8th printing. We'll get it right out to you. If you're overseas and want to purchase it from somewhere around the world that gets mail, as long as you're not in the middle of the Sahara Desert, and even there, if you get mail, great, we'll send it to you. Email us, cw@chartingwealth.com. We'll send you a PayPal invoice, cw@chartingwealth.com. Now, if you're in the States, follow the link in the show notes to purchase our book. Also, if you want all the special goodies, be a Patreon supporter. Depending on your level, you can get a free book as a Patreon supporter. You also, everyone, as at either of our 3 levels, everyone gets the monthly Q&A where we answer your questions, get you on the phone line, everybody together, talk about the stuff that's important to you. And we also take several stocks and ETFs that we analyze once a month for you too, plus the short chart training, the Bitcoin training, and our special Bitcoin chart, our quarterly chart training, all the good stuff's there for you. My friends, it's always great to provide this information to you. I appreciate all your feedback and your thanks. We do this for you, and we're just happy to share it with you and happy to have you listening. God bless. All the best from the whole team here at Charting Wealth World Headquarters.